With that, I want to introduce you to some friends and leaders in the Space Finance Committee sector. First, I'll introduce Dan Schatzman, who is the CEO and managing partner of Space Fund, and Meagan Crawford, who is a co-founder and managing partner of Space Fund. And Space Fund is a venture capital fund investing in space startups. So I think they're gonna be presenting capital landscape from the VC perspective. Are you gonna? I don't know if you want.
Meagan, you going to join me up here? Meagan is the brains behind the organization, so I think it's important she's up here. Meagan is one of the co-founders. I joined Space Fund about 2 years ago. So first, I'd like to say that it's a real pleasure to be here. I've been coming to the New Space Nexus forums for 3 years. I've known Casey for a little bit longer than that, and I'm very impressed with the evolution that they've gone through. I've seen the results of what has been done by Casey and her team, and I've seen how many companies are actually able to get non-diluted funding and POs from the space industry. And so I'm very impressed by Casey's work and what she's done here. I'm also very impressed with the infrastructure in New Mexico. So I'm going to have a bonus slide at the end where I'm going to talk about that briefly. Next slide, please. So we have two worlds here. We have the venture capital world and the space world, and how do they collide or how do they interact? And I think it's very important to understand that in the space industry, you guys are mitigating risk at all times. You guys are sending things all the way up into space that cannot be fixed. You can't do anything about it if it goes into space and something goes wrong. Well, in the venture capital world, we're investing in companies that are working with you to send things into space, and we can't get our money out. So it's not like a public company where we invest and we don't like it or the price goes down and we get our money out because we're scared. No, once we make an investment, it's usually there. It's an investment that's made for between, let's say, 5 to 10 years. And so that's very important to understand that you do a lot to mitigate risk and we're doing a lot to mitigate risk. Next slide, please. So I'm going to talk a little bit about macro forecasting and micro forecasting. And so it's not really what you don't know that gets you in trouble. It's what you know for certain. And that's an old saying by Mark Twain. And I can tell you it's bit me more than once. And it's very true. And I think that, you know, as we're investing in you and we look at portfolio management, next slide, please, then it's very easy to understand that you can't predict macroeconomics. You can predict what maybe you're doing with a forecasting of a company, but even then you have to be very careful. So I just want to quickly talk about inflation, currencies, and interest rates. In the last 5 years, we've seen interest rates at an all-time low, and we've seen valuations go up. So interest rates are like the weather. When the weather is beautiful or interest rates are down, it's like being on a nice sunny day and walking on South Beach and enjoying yourself. But as interest rates go up, it's like being in a storm. Everything is changing and valuations are dropping and people are feeling the pressure. And so I want you to keep that in mind, especially some of the cohorts and the companies that we're looking to invest in that are setting their valuations, that these things matter. And I'll talk about this in a minute. Next slide, please. So we cannot predict the future. I cannot tell you what interest rates are going to be next year. And I cannot tell you what the inflation rate really is or what it's going to be. All I can do is focus on the things that I know about today, the real things. So we don't really predict the future or try to predict the future. We listen to people's forecasts. We do make investments according to forecasts, but we also are very careful to look at what's happening now. Next slide, please. So I'm going to quickly go into how I see the space industry and talk about it briefly, just because one of our fund of funds, a fund that invests in funds like ours, just told me, is space really an investment asset or is it an investment category? Which I think it is, but I'm going to talk about why I think it is. So if you go back to Bretton Woods, I think it was in 1945, 46, somewhere in between there, 44. I just saw the slide. I can't see it down here. They had the Bretton Woods conference and they made a lot of important decisions about finance and economics. The IMF was set up, a number of other things. But what a lot of people don't realize in history is the US Navy was the only standing Navy at the time. And because of that, we said to our allies, we will protect all of the oceans and make sure that you can move your goods, which was the least expensive way then and is the least expensive way now to move goods across the world. And that gave everybody a chance to trade with the United States, which at that time was the only market and the largest market available. And with Bretton Woods, next slide, please, we were able to lift about 4 billion people out of poverty because they were able to trade with us. And that changed everything. And that created economic prosperity for the world. And the United States should be proud of that, in my humble opinion. But now we have another dimension, and that's space. Next slide, please. And so whoever's going to control space is really going to control the world. And we have to just kind of understand that. Most of the people here do understand that, but as I'm talking to different investors, this is something that I find very important to explain. Next slide, please. So probably about 15 years ago, I tried to buy a space company. And it was a cost plus contract, had very slow growth. It was in Houston, it was working for NASA. And I could not figure out a way to grow that business or really change that business. But then 5 years ago, everything changed. All of a sudden, we have seen the cost of going to space come down 4 orders of magnitude. It's just made it unbelievably cheap to get more things to space. Next slide, please. And what that has done, and this is my favorite chart of all, it's just put so many new things into space. So you talk about a hockey stick. I've never even seen a hockey stick like this before. You know, the number of things going into space is unbelievable. It's an exponential growth, something that we haven't seen in any other industry. So now space is an investable asset, and it's an investable asset because you have exponential growth in that asset. Now, Megan's done a study that is very interesting, a white paper on uncorrelated assets, and has explained how this is uncorrelated. I'm not going to take her thunder, but I'm always amazed at the work that she does, the analysis. But this is the reason that Space Fund was started, is because now there's an opportunity to invest in a high growth industry. I personally believe as high growth as AI, but I'm not, maybe not at the same scale, because we started at such a low scale that we think we will be able to get a return on investment in the next 10 years. Next slide, please. So what does that mean? I love this slide because I like Charlie Munger. He lived in 99.9 years, which is my goal. And he also was able to continue working all of that time. And that's probably the reason I joined Space Fund, is because it was the only way I could think of that, you know, I could still be relevant and people would talk to an old guy. So that's why I'm here. But I'm also riding the space wave. So if you see what he's saying, and everybody knows Charlie Munger was with Berkshire Hathaway, he did very well, but he really believed in finding things that had a growth rate that was going to be continuing and that you could invest in over the long term. And I think that we're at that point today. Next slide, please. So we have a very small contribution. You know, when I listen to the different speakers and I see how qualified they are, and I see all the things that they've accomplished, and you know, people have landed on the moon, people have done other kinds of work that is just amazing. I want to make sure you understand, we have a very small piece or contribution that we're making to the space industry. And that small contribution is we are trying to find startups that are going to become unicorns. What does that mean? We're looking for companies that are going to be worth 0 to 100 million in 10 years, or at a later stage, have 100x return within 10-year period. And I know that sounds like, wow, you have very high expectations. Why aren't you doing that? That's really what venture capital does. So it's just, that's the model of venture capital. We invest in them. Hopefully we nurture them to success. I can tell you, I had 2 nights ago, a 10 a.m. call on a company that needed more funding. I get a lot of pushback from some of my different portfolio companies on advice that I might give, but but at the same time, we are hopefully nurturing you and helping you to create a successful company and helping you find an exit when it's appropriate. Not when we think it's appropriate, when you feel it's appropriate. When you feel it's appropriate. I don't know if you caught that part. Next slide, please. So we have a very good team. Next slide. I believe the people are the company. You know, Meagan is a co-founder. Leo Womack is a very well-known investor in the Houston area. Leo Rodriguez, who was my boss at one time for about 15 years, ran $5 billion worth of companies in Emerson, in different parts of the world. Next slide, please. Sagi was the lawyer at Blue, what was that one? Oh, Origin. And I said Blue Halo the last speech and he corrected me. Jaime has done a lot of work with a lot of different banks all around the world, notably Banco Santander. Many of you know Sean. We've worked with Sean. We've invested in his company. He's been very helpful for really kind of filtering through the different technology presentations. And then Jordan recently joined us to help us to leverage technology within the Space Fund. Next slide, please. So processes. You know, I think this is so important. It's not roulette. It's not that we're just spraying and praying. We have actual processes to find these companies, and now I'm going to reveal those processes. And then Megan's going to go into a deeper dive on the technology side of what we're looking at. Next slide, please. So our job is really to hunt for space unicorns. I love that concept that we're out there looking for these unicorns in space. Next slide, please. It's got to be done with portfolio management. So we begin taking into consideration risk. We're mitigating risk. That's the first step of what we're doing. So as you're pitching to us and saying, this is the next thing that's really going to change the space industry, we're the SpaceX of satellites, we can do this, we can do that. We have to kind of listen to it, understand what you're saying, kind of go through a lot of processes to make sure that we make good decisions. And that's difficult. So we also have to make sure that we don't overinvest in any one company. Next slide, please. Oh, let me just go back one if that's possible. Yeah. By the way, and I've had this conversation with 4 different companies since I've been here this last 2 days. We don't invest in safes. And I always hope that people don't take debt if they're a startup. So investing from a venture capital perspective is an asymmetrical, I heard asymmetrical quite a bit today, is an asymmetrical trade. So the most we can lose is what our investment is. Okay, so we're equity investors, not debt investors. And I sometimes see venture capitalists thinking they're sharks, putting a big load of debt on some of these startups. And I'm very much against that, especially if it's high interest rate debt. Because what you're really doing, instead of nurturing a company to success, you're overloading them with pressure, holding them back, making them think of how they're going to make those interest payments, and you're just a shark eating its tail, and it doesn't make any sense. Next slide, please. So again, 50% of our portfolio goes into startups. And so we're seed, pre-seed, Series A kind of startups. 50% we may consider putting into what we call special situations or later rounds. And we're raising our 3rd fund now, over 50% is committed. We feel very blessed that, you know, things have been moving forward in a very positive way recently. Next slide, please. So how do you find a space unicorn? Next slide, please. So laws of physics. as you're getting a pitch and as you're talking to people, we're hoping that you're going to say things like, yes, within the laws of physics, this is how it works. If you start telling us, which is, what people love to say, we're going to bend the laws of physics or our product breaks the laws of physics, red flag. Next slide, please. Engineering standards, GD&T, engineering standards matter. You have to have good engineers. You have to really understand what you're doing. Please don't skip steps. You guys know that better than I do. That's how you do mitigate risk, is by taking all the steps and having good engineering standards. And next slide, please. Guess what? If you're a startup, you're a business. So you have to have business fundamentals. Non-diluted funding is important. Purchase orders are even more important because it shows that you're going to have long-term profitable growth. Those things matter to us. Next slide, please. And then, of course, the team. So I'm big on teams. I said earlier, your team or your people are your company. So we're looking for companies that have very solid teams. They're courageous in that when they're going through that valley of death, they're going to stick with it. They're committed. That means you're willing to work 15 hours a day, 7 days a week, and still be happy that you have this company and you're running it. You're competent. You come from a space background, or you've invented something, or you've done this before. All those things are very important to us. Next slide, please. Disruptive technology. So this is the key. If you have something that changes the game, if you're going to land a rocket, if you have something that's really going to make a difference, if you have a navigation system that's unheard of that can replace GPS, if you're able to do things that no one else can do, and our cohort of stakeholders in this room believe in that, then that's very important to us, and we want to be involved with you. Next slide, please. And then your value proposition. Please understand that, when you're looking at coming to us and talking to us about your valuation, it's very important that you really think, is someone going to be able to invest today, make 100x return over a 10-year period, and do we have a value proposition that makes sense? And this is where we have a lot of discussions. I always tell people the best job in the space industry is working for the Space Force, or working in the government side and developing new technologies, or working with people. The second best is, and if I was 20 to 40 years younger, that's what I would do. The next best job is being a founder, starting your own space company, coming up with a disruptive technology. The worst job in the industry is being the guy running a venture capital firm that has to tell somebody your valuation doesn't make sense and your baby's ugly. Nobody wants to hear that. And so it's just like, this old guy thinks he can tell me how much my company's worth, and I just feel terrible. And so we want to work with you, but we also want realistic expectations, and getting people to have those realistic expectations so that we can make those investments is very important. I'll give you an example. I had a very late night call. Company was at $100 million valuation. They're willing to give up a tremendous amount of their founders' shares, and the valuation just went to 30 million. And they need that just to make that first flight and get things off the ground. And so, I was arguing with them that I thought it was more of a $50 million valuation just 3 months before, and now they're in a panic. And you want to avoid that. So don't overvalue before you get started. You have to crawl, then walk, then run, and then please work with your venture capital firms and tell them things that are going awry early on so that they can help you get through that valley of death. All right, next slide, please. So that's it. When all these things are put together, then you appear to be a space unicorn to us. We only have to be right twice out of 20 times to make us one of the better venture capital firms. We're a venture capital firm only focused on space. Next slide, please. So here are some of the companies in our portfolio. You have famous ones like SpaceX, Axiom, Rhea, a number of companies, Voyager. A lot of these companies have been, doing well. We haven't had any failures yet. We've gone through probably 1,000 pitches. Sorry, 1,000. She keeps me straight on everything. 1,000 pitches so far, but we've only picked 22 if you count our stealth company, right?
21 is including.
21 is including the stealth company. Next slide, please. Special situations, I'm gonna go through this quickly. I think some of you saw the Wall Street Journal article. SpaceX was just valued at 200 billion. So would we invest now? Probably, because that's a special situation. Next slide. They have Starlink, which is a great spin out. They could take that public. I've heard Ron Barron say they're looking at taking it public in 2027. So that would be a nice, easy layup to get some portion of your investment out. And SpaceX is, you know, the story that we all love to talk about. Next slide, please. Technologies and solving problems. This is actually where Megan's taking over, but I have 2 slides that I just want to throw in because I'm actually from New Mexico originally. Next slide, please. The Space Valley. So let me just throw this pitch out there. So I was with some people from Air Force Research Labs, one of the retired heads of Air Force Research Labs, and he said, you know, the problem that we have is everybody in Washington, D.C. on Capitol Hill knows that the deep space discoveries come from New Mexico. But the issue is nobody in New Mexico knows it. And so it's just an incredible problem in that how do you get support from your state? And so we have this wonderful Spaceport America, which I personally love. It's also 25 miles from my farm. And it's able to do all these very important things, these incredible things, and we need support from the state. We need them. They have put in a lot of money, so I'm very, you know, appreciative of what our state has done there, but there's just so much more to do. The second thing I want to say is I really believe in the Space Valley, but I think it begins in Boca Chica and ends somewhere up in Colorado because of all the different groups that are doing things there. It's just that we're the center of the Space Valley. Okay, so we're the diamond in the rough in the very center. Last slide, please. And so there's about $40 billion spent on defense, and so in just this region, and that doesn't include a lot of the other things that are going on the commercial side. So I hope that you all come back to New Mexico. I hope you see New Mexico as an important place in the space industry. And I want to say, before I turn this over to Megan, New Space Nexus, you guys are doing a great job, and we appreciate all the work that you do. So thank you, Casey.
Excellent. All right. Good morning, everybody. And to save you a little time and effort, if you want to, the first 5 or 6 slides, I had them set up to do click for each different bullet point. So if you want to just click through all 5 real quick and get the whole slide up, it'll save you some time. So thank you, Dan. Excellent introduction. I like to say that Dan is the best type of CEO you could have because he bought himself a job. He was an investor first, and then we roped him into running the whole thing for us. So couldn't be more grateful to have him around. So today I want to talk a little bit about, as Dan mentioned, the technologies, the areas of interest, but I wanted to give a little briefing about the economics of venture capital. So I see venture capital as the fuel, right? This is what actually gets the rocket moving, okay? So we see ourselves as a catalyst, but our primary goal is to create value for our investors, right? That's who we have the fiduciary responsibility to. And so this VC capital takes these ideas through the valley of death to hopefully create profitable companies, right? And so then that's how we get capital back to our investors. And specifically in the space industry, we see that companies need to have both commercial and government revenue to really reach escape velocity and to see success. So where'd Bruce go? There's Bruce, space economics expert right there. Space is hard, economics is hard, space economics is even harder. So I thought you would appreciate that one, Bruce. All right, next slide, please. So fundamentally, it's a numbers game. As Dan said, we don't do the more traditional VC approach of spray and pray, but fundamentally, it is a numbers game. So most VCs have dozens, if not hundreds of companies in their portfolio. So these portfolio companies, we call portcos. And so most VC funds also have a 10-year fund lifetime. with a 3-year investment period at the beginning of the fund. So that means there's only 7 years for these portcos to actually start producing results. And the general expectation is that 75 to 90%, and in some cases more, of these companies will completely fail. That means their valuation will revert back to zero. And I think there's one more bullet on this slide. Thank you. And so that means the remaining 10% of companies left in this portfolio of investments need to have exits at 100x the initial investment valuation in order for the portfolio of investments overall to be successful. Next slide, please. And so if you are a startup company, and Dan talked a little bit about the valuations, making sure that your valuation is realistic. I like to do this math with potential portfolio companies and just kind of work our way backwards from what success looks like, right? So consider a startup company. They've got a seed round at a $5 million valuation, which is fairly reasonable for a lot of space companies. That company needs to be worth 100x in 7 years in order to make the VC math work, right? So can this company be worth $500 million in the next 7 years? And the way we kind of do that math is a standard industry 7x profit or EBITDA is kind of, a lot of companies, when they go public, their exit multiple is usually between 5 and 10. So for ease of math, we usually just use 7x. Okay, so that means you have to have $72 million in profit to have a $500 million valuation 7 years from now. Less than 1% of companies meet this criteria. And I think there's one more bullet here. Perfect. Less than 1% of companies meet this criteria. So if you can't meet this criteria, don't feel bad. It means you don't have a VC-able business, but you still might have a great lifestyle business. And sometimes people take offense to that. And by lifestyle, I mean retire your parents and buy a boat lifestyle, okay? This is not necessarily a bad thing, right? But it just might not be VC-able. And so I think it's really important for founders to understand this math so that they don't have to get mad at Dan when he tells them their valuation is too high. All right, next slide, please. So our basic thesis for the opportunities that we look for to invest in is utilizing the space environment to create value. We are a space fund after all, so there's got to be a space component to the business for us to even look at it. Got to be a solvable problem, physics and engineering, as Dan discussed. And I think most of you may have heard of something called the tyranny of the rocket equation. I like to say the tyranny of the VC equation, which is what we've just been talking about. You've got to be a realistic exit candidate within 7 years with the potential to increase in value by 100x. Next slide. So fundamentally, we focus on problems, which may seem a little counterintuitive. Next slide. But the way I look at it is that problems equal opportunity. When there's a problem to be solved, there's an opportunity to make money. Next slide, please. So the first problem that we look at is what I like to refer to as LEO growing pains. Next slide, please. So as most of you are well aware, low Earth orbit is where the majority of satellites currently are. Small satellite revolution has really opened up LEO for business. The combination of, as you saw in Dan's charts, decreasing cost of launch, and then decreasing size of satellites has led to that hockey stick growth in the number of objects being launched into space. And the majority of these satellites are commercial, not government. Okay, that wasn't that way in decades past, but today most of them are commercial. So there's about 8,000 satellites on orbit. I don't know, when was the last Starlink launch? That number changes a couple times a week these days, but about 8,000 satellites on orbit. But we expect 100,000 to launch in the next 7 years. So this is one of those, you saw Dan's slide about how the cost has reduced by orders of magnitude. Now we're going to have the number of objects being launched into space increase by orders of magnitude over the next 7 years. And that's important because what's my investment timeline? 7 years, right? Okay, next slide, please. So just by the numbers, I always think it's stunning to look at the numbers this way. According to this data from May 2023, so this data is a year old, 89% of operating satellites are in LEO. Next slide. And 91% of them were commercial. This number is probably a little bit higher today, a year later, as far as what percentage of the satellites are commercial. Next slide. So this has led to some significant and serious growing pains. As a venture capitalist, as any type of investor, you love to see growth. Growth is exactly what you want. But the byproduct of that growth is these growing pains. So right now, most satellites are very limited in their power, computer processing and storage, and communications capabilities. That means there's opportunity there, right? They have limited lifetimes because of the drag of Earth pulling them back down. So extending lifetimes, there's another opportunity. And ride shares don't necessarily take satellites to their preferred orbital destination, as Bucky was talking about. Sun synchronous orbit is great for some applications, but not for others. Next slide, please. And so the first thesis point for our Fund 3 is what we call infrastructure. And this is going to be the largest portion of our portfolio by a wide margin. And we're looking for any technology or service model that can reduce cost or time to orbit and/or increase profit and time on orbit. Next slide, please. These are the subsectors of this infrastructure category that we have identified. I firmly believe that by the time we get to the end of our 3-year investment window, there's going to be a lot more subsectors here and more detail in each of these kind of subpoints. But these are primarily the things that we are looking for right now to solve those problems we just discussed. Next slide, please. And these are our existing portfolio companies and where they fit within these space infrastructure buckets. Next slide. So the second big problem that we see is beyond LEO, right? We've got all this activity going on in LEO, all this hustle and bustle, and we're solving all these important problems to make LEO cheaper and better. But now we're starting to see commercial industry push beyond LEO. Next slide, please. So for those of you who may not be aware, I love this chart. This is my favorite visualization of the primary different orbits. And I put the little moon in the corner because I don't want us to just think about these orbits. I want to start thinking about an entire cislunar economy. Next slide, please. So beyond LEO, as I just showed that chart, HEO, MEO, but all the way out to the moon and beyond, creating that cislunar economy is something that Space Fund is very interested in supporting. And so we're seeing NASA, we're seeing DoD kind of lead the charge to push the industry further towards this kind of cislunar future. Next slide, please. And so global coverage from LEO may require hundreds of satellites, but you can get that same global coverage from GEO with 3 satellites. So now we're starting to change the economics of doing business in space if we can figure out how to make GEO, which is the most profitable location in the solar system right now, more affordable. Next slide. So satellites typically have to be significantly larger to operate in LEO. They've got to be robust because it's a much harsher radiation environment. It's very remote. It's hard to communicate with. And so what we are looking for specifically is innovations that have pushed LEO businesses forward and how those can be applied to a GEO business model. Next slide. And then obviously moving out all the way to cislunar. So the CLIPS program has been phenomenal at kickstarting the cislunar economy. Intuitive Machines went public. We now have a public lunar company. That's amazing. If somebody would have told me that 10 years ago, I wouldn't have believed them. And so now we're starting to see these profit centers really develop in that cislunar environment. We're looking specifically at data and communications, habitable volume, Lagrange points as the strategic high ground, and maybe helium-3. We'll see. I'm still not convinced on that one. All right, next slide, please. So thesis point number 2 is beyond Leo. No more than 20% of our Fund 3 will go towards companies that are have technologies or service models that can make beyond Leo economically feasible and profitable, again, within the all-important 7 years. Next slide, please. Here are some examples of some companies we've already invested in that are trying to solve some of these problems in the beyond Leo realm. Next slide. Third problem, monetization of space data. People talk a lot about Earth observation, and Earth observation is fundamentally the majority of the reason that people go to space. But monetizing that data has been slow to develop. Next slide, please. So climate change, climate monitoring, crop monitoring, shipping, human trafficking, how many barrels of oil are sitting at different ports around the world. These sorts of Earth observation opportunities can create value. And then when we talk about making life better for humans here on Earth, right? You got internet, you got TV, radio, videos of the Earth from space now coming back. And then manufacturing of products that can be useful to the everyday human here on Earth. Next slide, please. So I found this statistic to be stunning, and I double checked it and triple checked it and had somebody else check it to make sure before I started presenting about this a couple of years ago. Less than 1% of the data that's collected on orbit makes its way back down to Earth, or to analysts anyway. Okay, so and the analysts are the ones who drive the value creation from this data. Less than 1% of what's collected makes its way to the analysts. Even then, these are huge data sets still, and very, very difficult to analyze. So this limits the use cases or the monetization potential for this data, both by sales model and customers. Customers don't understand that this data is available or why it's valuable to them. Next slide. The other real opportunity in this category is making stuff in space, utilizing the unique environment of low gravity, vacuum, near absolute zero temperature, and radiation. How can this be beneficial to create things in space that we can't make here on Earth? Most people are aware that protein crystals form very differently in space. This has applications from everything from fiber optics to biological manufacturing. And computer chip manufacturing requires this type of environment. Extreme precision requires this cold, airless environment. And what else? What are the thousands or millions of other products that could be created using this unique environment of space? Next slide. So the third thesis point is what I call space for Earth. No more than 15% of our Fund 3 will be invested in technologies and service models that can radically change the way humans on Earth interact with their environment, technology, and each other. Next slide, please. These are some examples of companies we've already invested in out of Funds 1 and Fund 2 within this category. And then we've got one more category for you guys, if we can move to the next slide. Problem number 4 is that humans are squishy. Next slide, which is great if you need a cuddle. Not so great if you're trying to go to space, right? And so keeping humans alive and healthy in space is really hard. It's really, really hard. To date, the longest stay aboard the ISS was about 1 year. I think it was 360 some odd days. This is obviously a pretty major impediment to Elon's future of, humanity being a multiplanetary species. If we can't keep humans alive for more than a year in space, how do we ever get to that future? Next slide. So NASA, Roscosmos, and now the Chinese Space Agency are really spending a lot of time and effort trying to solve this problem, right? But the side effect of that is the medical breakthroughs that have come from learning how human bodies react to space have led to huge advances in medical science for people here on Earth. Everything from cancer drugs to artificial hearts to potential cures for Alzheimer's, asthma, cancer, osteoporosis, etc. Next slide. So commercial LEO destinations, CLDs, or space stations, as we call them colloquially, are being designed and will be starting to be launched as early as 2026 to replace the International Space Station with commercial outposts. They'll have both government and commercial customers, but by far the largest source of revenue is predicted to be biological and life science experiments and manufacturing. And that's across the board with all the commercial LEO destinations. Every one of their business models relies on this portion of the business in order for the economics to make sense for a space station. Next slide. And so, bullet point number 4 here is a human future. Taking any technology or service model that can use the unique environment of space to improve the understanding of human health. Next slide. These are some examples of companies that we've invested in within this category. Right now, because this is still very kind of early on in the game, you see that we've been investing in habitable volume, right? We've been investing in these commercial LEO destinations in preparation for them to start doing some of this biological manufacturing. Next slide, please. Right, bonus points. Who doesn't like bonus points, right? Everybody likes bonus points on the exam. So the way you get bonus points with us, next slide, is by working with the world's largest space customer by a huge, huge margin. The US government is the world's largest space customer. Some people estimate this to be 20%. Dan thinks it's probably closer to 75%. Somewhere in the middle is probably the truth that the US government is responsible for a huge portion of the economics of this industry. And so this is civil government and military customers, and they buy technology, data, and services. Next slide, please. So it's not a requirement that our potential portfolio companies have government contracts, but it is very much an important part of our decision-making process. Getting that signal from the government customer that they are interested in buying your product really helps us believe that the technology has a future. And so even our consumer-focused portfolio companies typically receive one or more government contracts. And we can also help international companies integrate with the US government, either by becoming subcontractors of existing American portfolio companies or helping them set up satellite offices here in the States so that they can access this very valuable customer set. Next slide. So quick summary, next slide. Space infrastructure, at least 60% of the fund. And then beyond LEO, space for Earth, and a human future will round out the rest of the fund with those bonus points for working with the world's largest space customer. Next slide, please. So a little bit about Space Fund's secret sauce, and then we'll wrap this up here momentarily. Next slide. We help create value. That's our goal, is to not just set it and forget it. Like a lot of investors, they give you a check and they walk away. You don't ever hear from them again. We actually dig in and help the portfolio companies as much as we can. We like to get our hands dirty. We like to help the companies get that non-dilutive government funding. We like to help them raise up rounds. Next slide. And so we do a ton of primary research. I'm constantly amazed when there's a fact that I know to be true, and I go to find a source to cite to prove that that thing is true, and there's no sources that exist. Or when I get into an argument with AI looking for sources to cite, and it keeps sending me back to my own website. So we do a lot of this primary research just to be a data provider about this industry, the economics, and what's going on. So we have several papers, one's being published in August, but everything is available on spacefund.com/intelligence. This is our market intelligence section. Next slide. We also have our reality rating databases. As the person who is our webmaster, I can tell you the launch database, Earth to Space Transportation, is the most visited site, a page on our website. We're currently tracking 183 launch companies around the world, which I think is a pretty stunning number that most people aren't aware of. And we're going through these different sectors of interest and cataloging these companies. And then we rate them on how real they are. That's why we call these our reality ratings. Next slide. So Dan touched on this briefly, but I think it's worth mentioning, especially in this kind of inverted pyramid funnel format. We're currently tracking over 4,000 companies. We've published reality ratings on over 600 companies. We've reviewed over 1,000 different space startup company deals, and we've invested in 21. That's effectively 2%. Next slide. So a little bit of advice on how to win with VCs. If you want to approach me and Dan or any other venture capitalist out there in the world, do your homework. Go to the website, read their blogs, read their Twitter, read their, X. Look at the existing portfolio, okay? One of the biggest mistakes I see people make is they'll see that there's a company in my portfolio that is a direct competitor to their company. And they'll say, oh, that means they're interested in this technology set or this solution set because they've already invested in it. Absolutely true. But I also have a fiduciary responsibility to my investors. So when you send me all of that private and privileged information in your deck, I am required to send it on to my portfolio company for competitive, intelligence. So just be careful about that. It's a little tip. Know the math, that math that we talked about in those first few slides. Understand what your company's real profit potential is and do it within that 7-year time frame. Develop these relationships before you need them. One of our founders started having coffee meetings with me 2 years before he ever asked me to invest. And he took my advice and implemented it and came back 2 months later to the next coffee meeting and said, this is how it helped and this is what worked and what didn't. And so I knew that he was going to be coachable, which is really the number one thing, is you're never going to have all the answers. You're never going to have all the solutions. You're never going to have all the contacts. Be willing to take that advice, be willing to be coachable. And that's one of the biggest things that we look for. Next slide, I think is the finale. There we go. Thank you very much. Spacefund.com.